Now I had another price relationship on the same chart, Tesla daily, measured a low to a high, ran the extension, and there was a 2618 extension that came in near that other area. Again, on June 5th, 272.
Hello, traders, and welcome back, traders of the world. To help me heal in today's guest, I brought in the ultimate big game hunter. Co-hosting with me is Caco Maia. Normally, he's out on the open ocean breaking records as a multi-champion marlin and billfish fisherman. But when he finally steps off the boat, he used that same exact patience and precision with Fibonacci to fish for the biggest setups in the market. Caco, welcome aboard.
Gary, I'm a huge fan of Fibonacci and you as well. So thank you for the opportunity of letting me ask you some questions about Fibonacci. It's a real privilege to talk to the Fibonacci Queen.
Okay, if you ever watched a stock plummet hit an invisible, completely handled price level, immediately reverse like it hit a brick wall, I promise you, it wasn't handled. Someone out there had a Fibonacci cluster drawn right on that exact tick. And today, we have the absolute royalty of the methodology. She's famously known across the industry as the Fibonacci Queen. She has been in the trading trench since 1978, working the chaotic floors of the Chicago Mercantile Exchange, the CBOT, and the COMEX. She's also the author of the brilliant book, Fibonacci Trading, How to Master the Time and Price Advantage. She doesn't just look at price. She aligns price with time to find the ultimate explosive setups. Running her day trading room at Synchronicity Market Timing. She was a star student of the great Robert Miner, but she took the Fibonacci game and made it entirely her own. Carolyn Boroden, welcome to the show. I have to ask you to kick things off. Do you ever look at a pineapple or a pine cone at a grocery store and just start calculating the golden ratio?
Well, sometimes I think about it, especially when I see the Romanesco, that thing that looks like broccoli, but it's got the ratios in it. That's funny.
Okay, so here's the plan. Grab your coffee, make it a double, and focus, because today's episode is going to completely rewire how you look at a naked chart. Strap in, because right after the break, we are opening the playbook of the ultimate mathematician, the Fibonacci Queen herself, Carolyn Boroden. We are going to find out why aligning price clusters with timing cycles is the actual cheat code to catching the marketing reversals, and how combining old school Chicago floor trading grit with perfect geometric symmetry gives you the ultimate edge. You cannot afford to miss this. Don't go anywhere.
You ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
So, Carolyn, welcome to the show. Let's get right into it. Let's take it all way back to the beginning. You started your career in the industry in 1978, working on some of the biggest, loudest trading floors in the world, the Chicago Mercantile Exchange. Those pits were a physical, aggressive, and completely chaotic boys club. Tell us a bit about your background. How did you even get your foot in the door to start in that wide environment? And how did you go from the sheer noise of the pit to the absolute mathematical order of Fibonacci?
Wow, thanks for having me. And I will tell you, though, that I actually did start in the business in '76 on Wall Street when I was 18. But I didn't really start learning about futures and technical analysis until I was 20, and they moved me to the Chicago Mercantile Exchange at that point. So that's where I learned the basics. I took a class on, basic technical analysis. And don't laugh too hard, but we had paper charts that we would update each day with a pencil. We would enter the low to the high and the close of the market. It was insane. So this was pre-computer that I started. And what happened was the group that I worked with in New York said, hey, there's this job opportunity out in Chicago. Are you interested? And they sent me on a trip, and I stayed out there for a week and visited the floor, and I said, I'm in. So I picked up and I moved when I was 20. And I basically, I got a little bit inside the pits, but mostly I was on the outside running an operation. So basically I had to be by the phones. I had to give hand signals to my clerk, like buy 100 at the market and, all that kind of stuff. And that's where it all started. But there were times where I literally had to go into the pit and grab the guy by the collar and like, where's my order? So it was, it was fun. I really have some good memories of being down there. But that's how it started. And then that took me to, I'm going to learn about the charts.
How many women at the floor at the time? Do you remember?
I think, very, very low amount of women, maybe it was 10%, maybe it was more. But as far as in the pit, there were probably only 5 or 6 women that had memberships at that time. I mean, I could be wrong because it was a while ago, but I remember there were very few women that were, in the pits with a membership, yelling and screaming at people.
And they respected you already or not? Do you impose yourself?
Once they got to know me, I would say yes.
Oh, great. So, Carolyn, you build your foundation learning from the legendary Robert Mining, who spoiler alert, is actually coming on the show soon. But every great trader eventually evolves past their mentor to carve out their own unique edge. What is the biggest difference between Robert's classic approach and the signature Fibonacci Queen methodology you trade today?
Okay, well, there is one thing. Now, he would look at the basic Elliott wave stuff. But for me, it was too confusing to people and too confusing to try to explain, oh no, now it's an X wave, not a ABC or something like that. And I'm like, I'm not going to use that. I'm going to use, the outright retracements and extensions and projections and throw that out the window. But also, I remember having a conversation with Bob once, and he said, well, there's 3 levels, right in this area. And I said, no, Bob, there's 10. And so I showed him where I was taking, the projections from other areas of the charts and putting them all together. And, I think he sat there and scratched his head a little bit and was like, okay, that's different. So I did add more things to his analysis, that I did learn. But I will never forget the moment when I was sitting in the audience in Chicago and he starts talking about applying the ratios to the time axis of the market. And I was like, oh my goodness. And it was literally light bulb moment. And I was so excited about that after the presentation, I went and I said hello. And we ended up going out for a couple of cocktails and dinner. And then he invited me to his presentation the next day when he was going to be teaching a class separately. And that was the beginning of, him becoming my mentor.
So let's get into the mechanics. You define a price cluster as the coincidence of at least 3 or more Fibonacci price relationships within a relative tight range. For the trader listening right now, how do you build this? Are you mixing retracements like 3182, 618 with extensions like 127 to find the brick wall of support or resistance?
Right. Well, I mean, I'm taking, let's say, one time frame at a time. So a lot of times I'll start with a daily chart, but I'm using all the key highs and lows that might be relevant to the current market activity to run multiple retracements, multiple extensions, and multiple projections. And then I look and see, okay, where is this clustering? And if I get one, I have a trade set up.
Carolyn, my co-host Caco Maia couldn't be here live today, but he's literally out on the ocean breaking records, fishing for giant marlins right now. But he left a specific question for you.
Okay.
Finally, have you ever considered to use or test the 23 and 76 Fibonacci retracement? I ask you about that because they seem very much reliable in my day-to-day use.
I know you use it sometimes at 23%, don't you?
I do, 0.236, and then, but I don't use 764. I actually use 786, and that's one of the square roots. And that originally came from Bryce Gilmore, who was talking about the base to the height of the Pyramid of Giza being 1.272. And I was like, whoa, that's fascinating. I mean, if you can get a hold of Geometry of Markets, that's a really good book. But also, my mentor wrote Dynamic Trading, and that's like my favorite, okay, because it's a lot of the basics. It's very clear. He has a great way of, putting the work out there.
One of my absolute favorite concepts of yours is symmetry. You describe it simply as the similarity or equality of swings in the same direction.
Yes.
Why do so many retail traders completely ignore market symmetry, and how do you use 100% projects to spot when a corrective move is finally exhausted?
Well, for anybody who's met me at one of the conferences and watched the presentation, I bet they're using it now because it's extremely, extremely valuable. I was doing projections, that he taught me, but what I also found was on a same chart, like, let's say we're looking at a chart in Tesla, swings will be very similar to other swings on the chart, and they're not necessarily connected. Like I can go all the way over to the left-hand side of the chart, and I do have some examples for you today of this occurring, and you'll see that they're similar to current swings, swings that we've just seen. And it's just through the experience of running the analysis and looking at something and saying, this looks kind of similar. I'm going to measure it. And then seeing it work over and over and over again, I just kept using it.
Yeah, it's so simple and stupid that
yes.
it works.
Yes. Yeah, it's very simple.
Okay. Most traders slap a Fibonacci retracement on price and call it a day. But you use Fibonacci timing. You look at the days between prior highs and lows to project future reversal dates. How magical is when a price cluster perfectly aligns with a time cluster?
It's a thing of beauty. It's actually something that I want to take a picture of and, blow it up and put it on my wall because it's so beautiful when it happens like that. It does happen often enough. As a matter of fact, I do have the charts that I'm going to show you because on Sunday night, I knew that things were hitting the fan in the market. And I actually do have some night charts I put up as a courtesy when I'm in town, okay? And I had the night charts up, and I went and I put in front of them the timing work for a low and the price work for a low. And then I went to bed, but it hit and it held. And I don't know if you've seen the reversal in the S&P the last few days, but I can show you where that came from.
Let's see in a moment.
Yeah, I'll wait.
Okay. You teach that once you identify a high probability setup on a larger chart, you shouldn't just blindly buy. You drop down a 3 minute or 1 minute or even a tick chart like 233 or 144 tick for your entry trigger. Why is that time frame shift so crucial?
Well, I mean, if you use the same chart that the setup is on to wait for a trigger, the trade will be halfway over by the time you get in. So what we have to do is go down to a lower time frame chart that's going to get you involved in the market. I mean, at least shows a price shift and a reason to, be a buyer or seller. But it needs to be as close as possible to where our definition of risk is. We don't want something rallying $20 before we get a signal. We want something rallying, maybe within a couple of bucks. And then we can place a stop, either underneath the low, for example, that was made before a buy signal, or underneath the low end of the zone.
Carolyn, let's talk about survival. Finding a beautiful price cluster is great, but the market doesn't care about our feeling or our math. Let's get into the gritty mechanisms of trade management. Once you finally pull the trigger, where exactly is your anchor point? Are you tucking your stop loss right under that 0.7086 retracement? And when the trade actually works, how do you manage your exits? Are you automatically scaling out the 1.272 and 1.618 extensions? Give us your breakdown on trade size and protecting the account from blowing up.
Okay. Well, typically it is, the Fibonacci cluster or the timing low or something like that, that is defining the risk. So that's the anchor point. If we go back below it, you're out. It's a bust. It's not working. It's not doing what it's supposed to do. So that's when we get out. But as far as, if a trade starts moving in your favor, that's, it's kind of hard to describe exactly how you would, or when you're going to move to a break-even stop. But if you get involved in something and you're risking $2 and it's up $10, yes, you definitely want at least a break-even stop and more likely a trail. So what I typically suggest, like let's say if we get involved on a daily chart setup, I would say, okay, on the 30-minute chart, trail up the stop underneath a prior swing low on the 30-minute chart as it goes. So this way, if we don't meet the full target, that you at least, you'll get knocked out and you'll still have some money. Now, as far as exits, I give people to, a couple ways to do it. You can either exit at a target, but I don't think that's right, okay? Because there's so many times where we get so much more than target number one, and you miss it if you just get out at the 1272 extension. So I'll typically say, well, if you're trading multiple contracts, then maybe get out of half when you get to target number one, and then trail up the stop on the balance. Or maybe you get out of, another quarter if it goes to the 1618 extension. But if you don't trail up your stop and the market continues higher, you're going to be mad at yourself for not staying in, because it's not like you were suffering, if it keeps moving in your favor. So I like the idea of using a trailing stop and letting the market tell you when it's not going to give you any more, rather than, oh, let's just get out at the 1272.
Okay. Normally, your trades are like swing trading or day trading? Do you have a specific time frame?
A little bit of both. I mean, I'm looking at, I find that, I'm not seeing as much of the trades first thing in the morning for day trades, but there are times where I'll come in and I'll look at the 120-minute chart or the 15-minute chart. And if I see a trade, I'll do something on NinjaTrader, for example, there, and won't keep it overnight. And I use the automated trading strategy. So basically what it does is it automatically puts in the stop, and then I have it set up where it trails the stop automatically for me and will take me out unless I just hit exit. So that's one thing. But for the most part, since I don't like sitting in front of the computer all day like I used to, because, I'm semi-retired, and I do have people that do the work for me now. then I look at more of the daily charts because I do the end of day video and I'm looking at daily charts and weekly charts and saying, hey, there's a really nice setup on that chart. So I'm going to wait for a 15 or 30-minute chart trigger. And if I get it, then I'm going to do something with an option strategy, you know, whether it's a call spread or a put spread, or an outright call or put, depending on, you know, the situation. And then I can keep it overnight.
Okay, okay. I have watched tons of presentations of you, including at the Symmetry Association. You made a wonderful presentation there. I have watched tons of videos yours, read your book, read Connie Brown's book, the Caesar Connie Brown, and I made a chapter in my own book discussing different ways to use Fibonacci. This book here.
Very nice.
Yeah, it's a book for the Brazilian analysts to study for the test. Like the CMT test you have for the Brazilian analysts to be analyst work here as a regulation. So people used to work and read about you on my book in Portuguese.
Carolyn, in Flavio's book, there is a chapter discussing different ways to use Fibonacci. I actually featured your specific methodology and compared it to a famous Brazilian deceased trader named Marco Rossi, who also used Fibo heavily, but in a slightly different structured way. When you see other traders adapting Fibonacci to their local markets, do you think the math works equally well on the Brazilian Bovespa as does in the SP 500?
Well, I can't tell you that I've worked on that particular data, but I have used this on, you know, so many different things. I have looked at Forex, but I don't do a lot of work on that. I have done work on crypto, and it does work for that. As long as something has good enough data, like, I mean, I can't look at a penny stock. You know, I can't look at something that's like doing this and you know, try and make sense out of it. So that I can't look at. But as long as it has decent data and it has good volume and, you know, a nice chart, I can typically find something on it. I mean, I think it's extremely rare if I don't.
We are all visual learners here. So can you share your screen and pull up a live chart you are watching right now? Walk us through your exact process of running the high to low and low to high swings to find the current setup. How is yours?
Olá, espero que esteja gostando da entrevista. A Trade Brasil foi eleita por 2 vezes no Rank Awards 2024 e 2025 como a melhor academia de formação de investidores do Brasil. E ela tem um presente para você que está assistindo esse podcast. 10% de desconto, é só usar esse QR Code que está aqui embaixo e a gente te espera lá, ok? Agora não esquece de dar uma moral pro Flávio. Curte, compartilhe esse vídeo e se inscreva no nosso canal, ok? Até a próxima e obrigado pela presença. Valeu!
All right, so at this point, you should see a chart of Tesla. Okay. And again, this was part of the presentation. So, you know, the first question I typically ask is, you know, what would have told you to be a buyer in Tesla around June 5th? I mean, do you see anything there? I mean, a lot of people try and guess, and it's kind of a trick question because you're not really supposed to know because I'm going to show you. So here, for example, I'm going to go through, you know, starting with a blank chart and tell you how I came up with the information. Okay, so this is the same chart in Tesla. And one of the price relationships I found was a prior high to low swing. And it's a symmetry that was similar to the other swing. Okay, see, so here's the June 5th low. This was $94.89. This is $94.50. That was a 100% projection. Okay, next. All right, on the same chart, I have a retracement, a major retracement of a low to a high, 618. Okay, and I like to color code my stuff so that I know what is inside a, you know, a setup. Like I'll know if I see pink that there's a 618. I know if I see red that there's symmetry and so on.
You know that.
Anyway, yeah, and then we had the 618 retracement come in at 272.87. And then let's see, next. Okay, now I had another price relationship on the same chart, Tesla daily, measured a low to a high, ran the extension, and there was a 2618 extension that came in near that other area, again on June 5th, 272.62 area. But I'm not done yet. Okay, there's more. So again, you can see how far away this swing is. Whoops, that was not the one I wanted to use. So let's see if I can get this going. Okay, so we had this high to low way over on the left-hand side of the chart. That was 92.29. And again, not perfect symmetry, but we're in the 90s, okay? So 92.29 versus 94.5. And you can see visually that it just went slightly through that area, and that came in at 275.42. Okay, so that's another price relationship. And here's yet another one. So same thing, I'm looking at, in this case, comparing swings in the same direction, a high to low to another high to low. This one was $93.74 versus a $94.50. That came in at 273.97. And, actual low was 273.21, a little bit below that. Let's see what else. And that actually was pretty much how I came up with that setup. So we had this projection from here, this projection from here, this projection from here, this low to high retrace, this low to high extended. Gave me a cluster between 272.82 to 275.42. It was three 100% projections, a 618 retracement, a 2618 extension. The low came in at 273.21, which was directly in the middle of this cluster zone. So it hit, it held, and if we would have gone down to a lower time frame chart, you would have seen the buy trigger against it. Okay. And at the time that I took the snapshot, this was, a rally. We hadn't made the target yet at that point. I'm not sure if we ever did. But there was an $84.33 rally from there. Okay. Kind of looks like magic to me still. I mean, I've been doing this stuff for years, and it continues to fascinate me what happens with this work.
And how about the time? You could tell.
I do have a timing example that I'll go over with you. Do you want me to do that right now?
No. Go on, please.
Okay. Well, I can give you just like another couple of examples of setups. Symmetry by itself is one of my setups. So check this out. This is a daily chart of crude oil. Here I measured and I would have measured all of these. Okay, so in the example, I'm just showing you the ones that set up right here, because otherwise there would be a lot of lines on chart and it would be a bit confusing. But this high to low was $3.65. I projected that from this high. This high to low ended up being $3.67, symmetry. And then the only other thing we had was a 50% retracement of the low to the high. So you had symmetry plus a 50%, came in at 58, 52 to 55. Actual low was made at 58.53, directly within that zone. And you had a rally of $7.95 in crude. It looks like within a 2-week period, because that's a daily chart. Okay. So we would have met at least the minimum upside target and possibly even the second target. But I just wanted to show you that that was another one of the setups that I use every single day. Symmetry. And sometimes it's by itself, and sometimes it will have another price relationship with it. And then, I'll give you another example of, oops, I need to go back this way. This is Nvidia on a weekly chart. Okay, sometimes when the market has real big pullback, I have to back it up and look at the weekly chart. So in this case, we did have a major low to high swing, 618 retracement. I had another low to high extension, so there was a 1272 extension down here. And then I compared some of the swings in the same direction, and not all of them were the same or similar, but this high to low, from this high to low, was very similar. Okay, so We had the 100% projection, 1272 extension, 618 retracement. The zone was 86.31 to 86.93. The actual low was made at 86.62, directly within the zone. And it hit and it held. And look at this. Now, I think the challenge here is being able to stay with something this long, because we met two major targets to the upside. Okay, so you met the 1272 up here, and then, you know, from this low, it was a rally of $68.19. So a lot of times it becomes more difficult to just like, you know, okay, I'm up this much money, it didn't make the target, but you know,
let's put some in the pocket.
Yeah, I mean, so you know, we always fight with, we fight ourselves and we fight our emotions and all that kind of stuff. That is part of it. So that one, and then, all right, I'll do one more price cluster and then I'm going to go to timing. So here, this was a trade setup in Google. Here I had Symmetry here. This high to low was 1997. I projected it from here. This one was 1826. I projected that from here. I also had a larger retracement of 50% of the low to the high. Came in here. Then we had a 618 of this low to high down in here. And then we also had a 1272 of this low to high. And you can actually go back, you know, as long as you have some back chart data, and you can recreate what I just showed you, because I'm not making it up. People can go and prove it to themselves. So the, and you can see that these swings were not, you know, exactly similar, but $19 and $18 and $19, pretty similar. Okay, I'm not trying to be a perfectionist here. I'm trying to find a cluster. So that's the other thing that I want to say. Try not to be too much of a perfectionist. I am a perfectionist, which causes problems for me sometimes. So I'm saying don't do what I do. But bottom line, we found the cluster. It hit, it held, it triggered on a lower time frame chart. And there was a rally of $94 in 62 trading days. Okay, again, it would have been difficult, like once it started coming back down over here, a lot of people may have gotten out. But what we also do is then as the market unfolds, we run new levels so that, okay, well, if you want to still get in, we're going to run this Symmetry and try and find a new entry on a pullback and all that kind of good stuff. Okay, so that's what I do there. I'm going to go to my timing work. Okay, so this is an example in Facebook, and this is an older example, but it's where I had done the work to illustrate the price work and found a price cluster at 332.72 to 334.31. This is, again, it is an old chart, but it's a good example. And I had a symmetrical projection, 24.75. I projected that from this high. Okay. I had a retracement of 786 of this low to high. And then I also had a 1618 extension of this low to this high extended downwards. So that came in at 332.72 to 334.31. The actual low was 334.50. Guess what? It wasn't a perfect hit, but visually, it was absolutely close enough. And also, as far as definition of risk, it was absolutely close enough. If I see something visually very close to the levels or it looks like a hit, I'm okay with looking at that. So we ended up holding.
The time you are measuring between high and lows also, the
Yeah.
time. Yeah, and extending and retracing with the time too.
Yes, and that's what I'm going to show you next, because that was the price part of this example. Now, the timing part of this example, I had a high to high, 618 in time, come in on July 19th. I had a low to high, 100% in time, came in on July 20th. I had another low to low swing in time. 1618 in time came in on July 19th. And then I also had another low to low cycle. 786 in time came in on the 21st. So that means I had timing cycles between the 19th through the 21st. If you have timing cycles and the market is going straight up or straight down into it. You look for a reversal of whatever it's doing into it. So since we were trading down into this grouping of cycles, we were going to anticipate a possible reversal back up. And it just happened to match up with the price work. Okay, so that's time and price. That's a thing of beauty, you know, when you can find that.
Yeah,
you know, and it doesn't mean it's always going to hold, because a lot of times you'll see time and price and then it holds for a couple of days and then it blows through it. Well, you're stopped out. Don't stay with it if it goes through those areas. So that's
we're dealing with probability. We are trying to improve your probability of the trade. Yeah?
Yes,
using
absolutely.
both.
Absolutely. Let me see. I think I have another. I'm going to show you again. This is something that I know they have tools on Thinkorswim and NinjaTrader, and I use the Dynamic Trader by Robert Miner, but a lot of them do also have timing tools for you. So this is an example in the S&P, and this is where we put in the high that was made on January 28th. So I'm going to walk you through this. I think sometimes if I go too fast, I confuse people. So again, we're measuring the times between highs to highs, or lows to highs, or lows to lows. There's a number of other combinations that I do. Sometimes I'll do high to high from an intervening low. Okay. In this case, I don't think I did that. But here, when the market was going up, the first thing I noticed was that this was 6 bars up, this was 6 bars up. And when I looked at this, we were 5 bars up. So I said, oh, well, 6 bars up will be tomorrow. That is time symmetry, similarity in time of swings. Now, usually with symmetry in time like this, I'll give it plus or minus a bar, which means it could be either 5 bars or 7 bars, and I still consider it to be similar. Okay, but in this case, it was exactly even. 6 bars, 6 bars, 6 bars. Okay, and then I took a high to high here, and 618 in time was January 29th. I took another high to high over here, so you know that's this high to high, and 1618 in time came in on January 29th. Then I took the smaller swing. Now, if I use a smaller swing, and one of the things that I wrote in my book about the timing, if it's only like 10 days in here, I can only use the main ratios, like 618, 100%, and 1618. Because if you used all of them, there would be a hash mark every other day, or sometimes even every day. And that's useless as far as predictive values, so I don't do it. Okay, so anyway, so we had that. It was a small one, which is why I used the 100% in that case. Then let's look at, okay, some of these other ones. All right, so then I had October 29th to December 11th, 100% in time. So if you measured between here, you'd notice that the same amount of time is between here and here. Came in January 27th. Then I had okay, so this was the low to the high, this low to high of 6 bars, 100% projected from this low. Okay, came in on the 28th. Then I had a low to low cycle, 1618 in time, came in on January 27th. Another low to low cycle, 1618 in time, came in on January 29th. And then I had another low to low cycle, again, a very small amount of time here. So 618 is what I used there, and it also came in on the 29th. So now we have 1, 2, 3, 4, 5, 6, 7, 8 cycles, and you can go back and prove it to yourself that they existed. 8 cycles came together between the 27th through the 29th. We were going straight up at the time. So I basically said, everybody ratchet up your stops just in case the cycles kick in. And we ended up seeing healthy reversal. And it was a reversal of 222.15 from there. Now, the market did end up coming back. And what's kind of funny is that then I had timing at the next low that gave us another rally, but it never took out this original high. Okay. And we had since, you know, I mean, I took a snapshot of this recently. So it does show you that we did see, after a retest of a key high, we failed again. Okay, and that can tell you something. So that is that example. I think what I want to do, yeah, I mean, the other example was we had a February 4th low. And again, you can do the same thing here. I had high to high, 618, Feb 6. I had a low to low, 786, Feb 4th. I had a high to high, 1272, Feb 6. I had a low to low, 100%, Feb 4th. A little low to high, 100%, Feb 5th. A low to low, 618, Feb 6th. And a big low to low, 1618, Feb 4th. So Feb 4th through the 6th. What's the market doing into Feb 4th through the 6th? It's going straight down. Okay, guys, I know the market looks ugly, but please ratchet down your stops on any shorts and be prepared for a possible reversal back up. And there you go. It doesn't always turn the market. Just because you see it work a few times doesn't mean that it's going to work every time. And that's something I want people to know, because timing work is similar to price work, and where a lot of times the market will just blow right through it. But I do want to...
For that, you need to use always a stop loss.
Yeah. So I want to try and find this. Okay, so this is what I had on Sunday night. I saw the market falling apart. So I went ahead and I ran some, lower support, make sure that they had that. And I think, I'm not sure, we did have some on the weekly also. But I had to go with the contract that was trading, which was the March S&P futures. And that's what we were looking at. And we had, it looks like an extension, a retracement, and maybe it's two extensions. So a 1618 extension, a 2618 extension, and a retracement, which was a 50%. So we had three levels, right? And there were higher levels that the market broke through, okay? But when it got down to this area, and then we also had timing factors. Let's see if I could find it. Okay. So I do the timing factors typically on the S&P, and I had 1, 2, 3, 4, 5, 6, 7, 8 cycles between March 9th through the 11th. The market was going straight down into it in the night session, and it ended up, putting in a nice low. Now, it's more exaggerated when you look at the March contract, and that's because these trade overnight. I do not use overnight data on S&P cash or any of my stock charts, because it tends to mess up the charts, because it's really spotty data. But in futures, I use overnight data. So we basically had the timing that showed up with this histogram below the chart. I mean, not only the histogram, which gave us March 10th, 12th, but that's done in calendar day projections. But I had the outright stuff. I told everybody to watch for a possible low, that we had timing for a low. And that's what we saw, right? Is this missing a day? 9th, 10th, today's the 10th. So that takes us to the next decision.
Yeah, where to exit?
Look at this. So we had a beautiful rally from that low, from the time and price. It was counter trends. I considered it counter trend. You had a rally of $267.50, straight into resistance right here at 68.48 to 68.67. So here's another decision point. We are pulling back from it slightly. Now, I'm not going to tell you that I know that this is going to hold and that it's going to go down here. It could just pull back and then take off again, or it could just blow right through it tomorrow. Okay, but it is a decision, and that's what's important. And the next thing that's important is, do you have a sell signal against it? Okay, I mean, I'm not sure. Well, on a 15-minute chart you would have, but let's say we looked at I'm going to look at it ES and look at a 5-minute chart trigger. Wait, read that one, and then okay, and then I enter the template, which is the 834 EMA moving average combo, and you can use a faster one if you want. You can use the 513 if you want to be more aggressive. But here's the signal: you had the moving average crossover, the 8 below the 34, and on top of it, in the process of that cross, did you take out prior swing lows? Well, you took one out here. It's a little bit difficult to see, and then you also took one out here. So you had a reason to be short with the risk definition above here. And it might not look like much, but let's see, from there to there. I mean, that's 72.25 points in S&P futures. So I don't expect people to get the exact high or the exact low, but if you can get something in the middle here, you should pretty much be a happy camper, right?
Yeah. Right. Of course. And you showed before the oil how and we are in the middle of this war with the oil in the middle. Can you show again the oil chart? How is
well, I did
great movement.
I did post something. Yeah, this move was insane. Okay, but you know what's kind of funny here that we had. I was like, it's 11 weeks up and 11 weeks up. Well, then it became 12 weeks. But guess what? It's still similar to 11 weeks up, right? And we did reach an extension that we came off of. But I want to show you, because I'm doing this on a separate chart now, the price work versus the timing. So here, as we were trading higher, you know, things went crazy. Last Friday, I put out this work, March 9th and March 11th through the 13th. Well, here's March 9th. 1, 2, 3, 4 cycles. We were straight up, and I just said, I'm not asking you to step in front of the freight train. If you are smart enough to be long crude, please, please, please trail up your stops, because we have timing coming up. And we had 2 time windows, because if we didn't put in a high on the 9th, and we were still trading higher, I would have been watching this next window very carefully, which is the 11th through the 13th. But now what I have to actually consider, now that we're trading down, if we continue to trade down the 11th through the 13th, then I'm going to use those cycles for possible low. Okay.
Well, what any extensions got that high? The 120, any of your extensions got this movement, the projection, I mean?
Well, you know what? I think I might need to do actually a monthly chart, because like these, obviously, you know, they went way through them. That's why. Okay, yeah. So I had to find the extension on the weekly chart. Now there's still higher extensions. Okay. But I couldn't find any of the swings that would have given me stuff up here until I went to the weekly chart, because, you know, I didn't have enough back data to show it. But if you look at this,
was a crazy movement.
It was crazy, yeah, for sure. But let's say, okay, so what this is showing is that if we're going to get a 127 target from this major swing, that actually comes in at 151.04. Ouch.
Yeah.
I bought a gas car. So, you know, I'm not thrilled with that.
Let's fill up the tank.
I did. I was like, oh boy, I'm going now. But notice that I think if we add, okay, if I do CL, pound F, and do maybe a monthly chart with 300 bars, I might be able to give you something else. I'm not sure. Yeah, I'm not sure if this came in correctly. But one of the things that, I would typically do is I would start looking at, for example, this low to high and compare it to this low to high.
Mhm.
That's interesting. Okay, how about this one? Oh, we went through that one for sure. This low to high. Oh, no, see, that's insane. Remember when it was negative? I can't really even use
Yeah,
that.
negative is very
Yeah, let's ignore that
complicated.
garbage. I mean,
Tough
I'm
time to project a thing that's
Yeah.
being negative. Nobody saw that in life.
Yeah, I mean, how did they keep the chart that way? That doesn't make sense to me. But anyway, I can't give you that much from here. But like, for my clients, I've done the weekly and the daily charts on this, and we'll be watching the next timing and all that good stuff. I'm thinking I do have a counter trend trade in Apple. And you have to tell me when you run out of time, because
Yeah, I wanna this now. This is our signature closer. We ask every master who comes on the Traders of the World, even queens, take losses.
Yeah.
Looking back at your career, what was your worst trade? A moment where you ignore your own clusters or let emotions take over? And what did it teach you? And on the flip side, what was your best trade? Not necessarily the one that made the most money, but the one where the symmetry, the time cycles, and the price cluster hit with such mathematical perfection that it felt like you were reading the Matrix.
Okay. Well, it might not be what you expect, but I'll tell you, it was very early on when I ended up leaving the trading floor and becoming a broker for a short time. And so I decided, I'm watching them do this stuff. So I didn't know the fib stuff yet. So it was before the fib stuff, but it was a very simple, like a stochastic crossover. And I was trading the bond market. And this was in the days, again, don't laugh too hard, when you had to call in an order. You can't even press the button to get involved. But what I did was I looked at the stochastics crossing, and I had like 3 or 4 positive trades in a row. Then I put on one more, and it doesn't work. Not only does it not work, it took away all my other profits and then some. I had my first margin call. I walked home that day. I was so embarrassed. I literally walked back to my apartment that day. I was really sad and upset and like feeling stupid. I was like, why didn't I have a stop in place? So for me, I realized that I was not Superwoman, and also that I need to place hard stops in the market. So that's what I learned from it, because that was, I still remember walking home, and it was like, I think it was 30 years ago, at least 25. It was bad. Now, as far as the best, again, there's a difference between when I was in my 30s and I could remember the highs and lows of the market chart, and because I had them memorized. I don't memorize like I used to. So I don't have something specific, but as far as the best, because for me, the best example was when I bought my house in Arizona, and let's see, but I paid like I don't know, maybe $120,000 and sold it for 300 something. So it wasn't a market trade, but I have had the other trades occur, and it's going to be when I have time and price come together. I think there was a really, really nice zigzag or two-step pattern in the S&P that I wanted to frame. So that is where we had both time and price come together, and it held and it met multiple targets. But could I tell you the exact example? No, I can't.
No,
I'm sorry. My memory. Okay, I'm sorry. I'm going to give it away. I don't want to tell you how old I am, but I'm at the place where people start saying, "Why did you walk into the other room? Do you remember?" So I'm getting there. So I didn't have like a specific memory of one, but when I have a cluster come together with timing, and it doesn't even give you pain on the trade, those are going to be the ones in my memory that are going to be like, yep, that's awesome.
That still hurts.
Do it again.
Okay, Karen. To close us out, if you could give one golden rule to a young trader who is drawing their very first Fibonacci retracement today, what would it be? And for everyone listening who wants to learn the royal way to trade, who wants to dive deeper into your methodology, where is the best place to find your book? Where can they find your work, your chat room, and your social media too?
Okay. Let's see. Well, I'll start with the easy stuff first. I mean, Twitter, I post most of my business stuff on, and I am Queen of Fibs on Twitter with a blue check mark. I have 2 fakers that I just found today that are trying to ask people for money. I will never ask you for money. Please remember that. And then I have my trading room on ElliotWaveTrader.net, but I did also make my own site, Queen of Fibs. And on that, you'll get a drop down for a 2-week trial of the trading room, free, with no credit card needed or anything like that. As far as new traders, though, I would be like, well, I mean, stops is always a really big thing that I would talk about, but also risk reward. There's a friend of mine, well, there's a book, Market Math, and it explains about, how your chances to make money trading change depending on what your risk reward is. I mean, if you're risking 1 to 1, you're not in great shape. But if you're risking, let's say 1 to make 4, and you have a good methodology and it does work often enough, then you really, really have the odds with you. So I would have people check out the math, because don't risk 5 to make 5, or you're probably going to lose all your money. Make sure that you have good risk reward. With the charts and the setups that I work with, we typically have at least 4 to 1, if not more. Now, if we have a shallow pullback, it's probably not going to be that good. But if you have something like what I just have in front of you right here, which is time and price in Apple, the risk, well, when it initially happened, you probably would have gotten a signal around here. The risk is here. The potential reward is here. Okay. And I'm not going to tell you that means this is going to definitely hold. One of the things that I made sure that I did, like when I was on Kramer and stuff, would be tell them when you're wrong. Because I've had people say, hey, you told us to get into Google and Google's dropped $100. I was like, no, the trade was over when it didn't hold the price cluster. So that's why I say in advance, this is when I'm wrong. Know when you're wrong, and wait for your setups, be patient for your setups, and go from there.
Your Highness, this has been an absolute masterclass. You have shown us that the market isn't just random noise. It has an underlying geometric pulse. And you just need the right tools to measure it. For everyone listen, go get her book, Fibonacci Trading, How to Master the Time and Price Advantage, and check out her live chat room at Synchronicity Market Timing. Carolyn, thank you for your time, your wisdom, and for bringing the math to the world.
Well, thank you for having me.
That's a wrap, traders. Respect the symmetry, wait for the trigger, and we'll see you next time on Trades of the World. Take care. Bye-bye.